So you are struggling with mapping out those charts with a market structure, then this video is for you. It's going to help you to read the market better. It's going to help you to find those trades better as well. So we're on the Euro CAD on a weekly time frame. We'll go through the weekly time frame and we'll drop down to daily as well. So the first thing you need to understand is that we have different types of structure in the market. We have the swing structure, which is the major swings, and we have internal structure within those swings. So we have trends forming within swings. So what do I mean? Okay, so we have here a bigger picture. We can see the market creating this push up. Okay, here it's broke this structure high. You can see on the way up, we have all this movement on the way up. So what we call this is internal structure, where we can see the market continue to break higher with a bullish trend within this one swing. Then we have the market pulling back and we break higher. Now what I want to show you is the importance of understanding the swing of the market. Swing structure is always going to take control even of the internal structure, but the internal structure will show you the reversal point, and it's going to show you the continuation in the trend as well. So from this point here, the market does pull back to this higher low. We expect it to take this high. Now it fails. Okay, we only wick above that high. We don't close it. So from this point, we have this internal structure, but that's all just noise. Unless we have a break above this high or break below this low here, we don't continue bullish or bearish. Eventually, we can see we have the break to downside. So let me just show you that once again. Okay, we have this low, higher low, we break structure here to the upside. We have a higher low, and we just have what we call a sweep of the highs. This very often can indicate a potential reversal. Now, it's not a valid reversal until we see an internal structure reversal. Now, I'll perhaps go into more detail on internal structure on another video, because this is really to help you to understand mapping your charts. So now at this point, would you say we're in a bullish market still, or are we in a bearish market? Drop a comment below and let me know what you believe the market conditions are right now. Are we bullish or are we bearish? So looking at the swing structure, we've broken through this structure low and we put in this low. The market now has made a pullback. So this drop down, this pullback here is within the trading range, okay, of what? Of this push up. Let me just remove all that and I'll show you what I mean. So from this push here to the upside that took this high, okay, was a previous trading range. The market has then eventually broken out of that range, and we're now within this swing here to the upside. And you can mark this whole area out, because the point is we're really looking for the market now to break structure to the downside. We've broken structure, okay, here to downside. We've broken structure here to downside, and we go closer in, we'll mark a level off. Let me just mark a single low here. Look to the left. Have we broken out? We've just made that single close. Now we did wick here quite a bit, so it's not a great close of structure there. But of this move up, okay, we definitely did break structure. So that's how you can see the structure, okay, on the chart. And we're looking at those breakouts. So now if you want to look at the area here, let me just show you. This is the last move down in the market, and that's a pullback. So we broke this internal structure, broke this low as well, and just about took this low. So this is now a single pullback. So we can now look at this as a single pullback in the market. Understand we broke to downside, so we kind of have a bearish bias. We mark it out. Okay, we've come above our 50% area. Perfect. So we're in a zone to look for a sell. How do we look for that sell? Okay, we're looking for the internal structure, which I'll quickly just go through here. We can see the market is dropping down here, and eventually we break out, pull back, continue down. Now this move down, which breaks this structure, is going to leave us an area of supply. So this is an area of supply, and I'm just going to remove that internal area again. So that's our highest point. Okay, so we can see the market comes back in. We actually fill this area of supply to the pip, very, very close to taking that high. And this is still our swing structure here. Then what we have to look for is that internal structure. Now we've either got this as a move and we drop out, okay, or you could even look at it as one push up if you wish, and the market's failed to take out this low and we're still within that trading range. And let me just show you, take this off again. So the trading range you're looking for, okay, is basically this move here. So what do you see at the moment? Take a hard look at this chart. We're seeing this move up. Market's come back down. The market's gone back up. It's a ranging market. So right here at the moment, the market is in a sideways range. What happens normally within a sideways range? We can see a reversal. So to see a reversal here, the true reversal we want to see, if we was looking at this, that's our drop down, okay, in the market, that's our push out, pull back, push up. We need to see a break of this low, okay, so we failed. We only wicked through that low. We haven't broken that high either here. So we need to see the market either from this here break out to the upside. What that's going to create is a pull back here, continuation. And then we can start looking at new areas of demand and you continue to look to buy that market. You have to remember as well the major swing, okay, which is this swing here. We're looking for the market to be bearish. Now we did create this break of internal structure here, which does leave another area of supply that you can draw here. Now we had an entry off that supply and you expected to target this low, and that happened. That would have been a trade, okay? Understanding that the market at this point, my pen, okay, we broke that structure there to downside, pull back to the area of supply, there's an entry, and that's your target. Now, on a lower time frame entry here, this is where you can really rack up those risk to rewards. Take that off. So now let's think about where we are at the moment. We're inside this range. Let's now go down to daily. On a daily time frame, we know we're looking bearish. Let's look at this swing structure quickly on this daily. So we're looking at swing structure. So the market drops down, okay, pulls back, drops lower. We take out that high just there, pulls back. Okay, this is probably one big move up. Okay, and there's another move here. That's my swing structure. When you're doing your swings, you mark them out. Don't sit there and stare at the charts for too long because it's going to make you think there's a move somewhere where it isn't. So here, what can we see? So on a daily, we do have a conflicting signal. We broke structure here to the upside. So down here is where we have our new area of potential demand. And we could see the market pull back in, continue back higher. Now that is a possibility, okay? We go with what we're seeing on those time frames. Now we've already seen that break potentially higher on the weekly as well. Now it's down here. Look, we're looking for that sell. And we can see the same thing here on a daily. Using the daily swing structure, okay, we broke out. Okay, what do we have here? Okay, so we have this is our last buy to sell move. Price comes into the area of supply. And this is your target. Okay, so down here you can look for a lower time frame entry, or you can also go down and you can look for that structure break. Okay, now the same thing we can see here, there's a structure break here to downside. That then leaves me this area of supply. And let's mark it across. And there's your entry. Okay, and this is where potentially you would use the use of mapping your charts to enter the trade right here. Your stop's going to be above that high of the zone, and you're going to target to take out that low. And that's exactly how you just look at using the structure, right? Using this mapping system, mapping out your charts. Yeah, I know many people could be watching this video, could be saying, oh, this is in hindsight, this is in hindsight. You cannot learn unless somebody shows you what you need to be doing. Okay, so this is mapping the charts. Yeah, we can go back and we can do this and map it out. So let's just remove everything quickly. Okay, and let's just go back and we'll do a replay. So go back somewhere, let's grab a replay mode. Let's just mark it out anywhere. Okay, so I'll show you how you do this. So we'll go to here, we'll look for the swing structure. So a swing structure, okay, we had a last push down, we broke out, pulled back, pushed up, and then we broke straight back out. So we have a bearish bias. So the market comes back up, we sweep the high. Okay, so right now we're inside that trading range. So we just remove that. So we have the market stuck within this trading range. So what do you do? Okay, for me, I wait for that range to be broken. Let's just play it forward. Let me just up the speed. Let's go with 10. So we wait for this range to be broken. So there we have it. The range has been broken to the downside. So now we can continue on with what we're seeing. We expected it to break because we swept this high. Like, okay, what we're seeing on that weekly time frame. Now we've broken straight out. So now in a swing structure, I have a bearish bias. Now if we go in closer and we look at the internal structure, what do we see? So our internal structure is we pull back, okay, broke this low. Here we're looking for pullback to sell, continue the market. Off where? We're going to look for our last buy to sell area. We're looking for an entry out of this area of supply. So let's just take this off and see if the market comes back to the area of supply. Okay, so that's just pushed into the area of supply. And now what you would be looking for, if this is continued to go, we want to see the market take this low. Okay, so we want to see the market continue back down to take that low. And if the market now closes through above this supply, and let me just map this out. So we have that drop down. Okay, so our internal structure, okay, this is a swing structure, this pullback of this area. Our internal structure, we break that, we did. This is now mapping out your internal structure. So we broke out, pulled back, we broke out, we pulled back, and we've gone higher. So at the moment, we have a bullish bias. So unless the market can come back down here, break this low, okay, so we see this, and then we pull back into new area of supply, we're potentially looking for bullish moves. Let's see if we do actually close this area. So we've actually just wicked it. Okay, so we've done a sweep of that high, and potentially if we now run this low, we can see continuation for this low. But will it hold? And let's see, we have now officially broken out. So now we have that bullish bias. And what actually happened is that the market's held at this area of demand. And we haven't actually quite broken out yet. We need to see a breakout above. Right, so now we've broken out. We have a breakout area here, breaking this structure high. This is a new area of demand. Now, that's our internal structure. So we've got a swing structure at this point. We knew that we had this big push down. Let's mark that out again. So we went up this high, okay, the big push down. We're having a pullback. So what are you looking for? We're looking for that internal structure. Okay, so let me just make sure this is on. So we can take it from this high and we'll take it from this low. Okay, so on a pullback, we want to be above this 50% area. So let me just take that structure. Let's go see if we can pull back above that area first. Now, obviously, we can look for pullback into the area of demand on a counter buy back up with this internal structure. So we come off the demand zone, looking for the market to go back up and take that high. Right, now we've gone above that high into our potential sell zone. So this is our pullback area, okay, on a swing structure. But we are internally bullish. So you can see the market come back into this area of demand. And what we've done, we broke structure again. Okay, we've left the area of demand here. We also had a breakout area. We could mark out another area of demand here. Now it actually got triggered on this candle, so that may not hold again. Now until we can actually reverse structure, so let me just show you the structure at this point. So this is our structure. We're either going to come back here and we're going to see a continuation, okay, or go deeper and then continue back up, or we're going to see the market break down, okay, breaking through the demand zone. The demand zone is going to show you that structural point now. So we're going to pull back into demand. So we've gone through that zone, as I did say. We may go through that zone because it already got tagged here. So that left an area of liquidity, okay, for the market to take. Let me just show you what I mean. We had an area of liquidity below that low, which would basically take that area of demand here and take that liquidity into this demand zone. Now, if we are to see a reversal from here, you're going to have to see the market want to take out this low. If we can hold, okay, then we can look for the market to go back up to this swing high. And if we look at a swing structure now, okay, our swing structure is still going to be from this swing high to this low, but now we're above that 50% area. So potentially we could see that drop down, okay, targeting this low. So let's have a look, and we need to see if we get the reversal out here. All this low is broken. Right, okay, so went a bit too quick there, but we got what we call that sweep. Okay, nice bullish candle going to the upside. Markets closes here from balance. We should take this high and continue up. Okay, so we took this high. Markets now continue higher. So as a internal look, again, let's just grab my tools. So we had this swing pullback, okay, internal structure. We're expecting price to take this high, continue up. Now, does it have to do that? No, but looking at an internal of this structure as well, we can witness that we had this push down, okay, and now we have to push up. So potentially we could have a pullback continuation. So what does that mean? We've left behind. Well, I like this as an area of potential demand. Let's just see how the market runs. Pull that across. And again, we've still got to take out this low, okay, to see a potential reversal. But the market came back to this area of demand and we continued up. We expected to want to take this high. Okay, so we took that high. We're still looking for the overall swing to take this high. Doesn't have to. We've just swept these highs here. And we've run this high. So you can see how the continuation of that move has happened. Now, as we already come back to that area of demand, we'll be looking at a new area of demand here. Now we're still within that swing pullback, okay? So if we're looking for that reversal now, that was our previous move up. We still got to see the market take out this low, this area of demand. Okay, so this area of demand here has got to be removed. And let's go a little bit further because this video is going to go on for a long time if not. So let me just pause it because I'm missing what's happening here. Sorry about that. So we had a break here, pull back, okay, another continuation. So we've had another breakout here in the market. And what that's going to do is leave me a new area of demand. So okay, this is my main zone. This is what I class as origin zone. Okay, if you're not sure about your supply and demand zones, there are some great videos in this channel to teach you. So this is our major zone, but we also have this breakout here. So let me just show you. So the market has come up, okay, broke out. Wrong tool. We grab the other arrow too. So we broke up, pulled back. Okay, we did break out here and broke out again. So you see how this structure moves. So I like to look at this as a full zone. See if the market pulls back in. So we wicked through this low. Okay, so this could be manipulation of this low. Now, on the way down here, this area of demand, there is no liquidity. Okay, so what we can expect is this low to potentially be taken to drop into this major area. Let's see if this happens. Or we hold. It looks like we're going to hold, and we've broken through. So now we've broken up. So we continue to be bullish, okay, with this move. So the last area of demand was created here. We also have a nice looking area here broken to the upside. Now again, if we look at our swing structure, this is now not looking good because we just mark out the high is here. We've just now closed through. So now our structure no longer. Now I'm not saying you're going to be looking for a sell here all the time because you're not looking for that sell until we have a reversal. So what you're actually looking at now is your structure has done this and we're breaking back out. So potential full pullback continuation could be that larger swing structure. So I hope you can see how you can map out your charts very, very easily using this type of technique. So again, you can see how the market's come back. There's no liquidity really. There's a small liquidity area there. We wicked through. Now you're looking for the market to continue up to take this high. Now this isn't a trade that I personally would have taken to buy here. Definitely not. I prefer to see the market want to come back down to this zone. Reason being is because we have this strong bearish drop in the market, removing all this imbalance here. Okay, and I expected it once it done that. Okay, so we have a reversal to downside. We take all this imbalance. and then expect it to take this low. Now, this is something that I do teach was inside that NFXT Pro mentorship, where you go through the community and that program. All of that is taught how to use the imbalances and the imbalance levels, and this will teach you a accuracy you would not believe. But from here, we could see continuation and just see if the market can get through this imbalance. Now, we've just closed this one, so we expect the market to want to go up to take and fill this imbalance. If we continue higher, we could hold inside that zone. So we've actually come back down first after breaking this minor structure here. To show you, we have this level here broken. This is actually an area of demand, what was created, and we've pushed back up. And as the market continues to break up, we continue to have our areas to draw. So again, new area of demand is to be marked here. And you'll be looking for that pullback once again. Now, before we got that, we had another breakout, the one here. So we leave a new area of demand. Now, you could use it from this zone here if you wish, for this last bullish candle, or you can mark it from up here. Okay, the actual zone here is this is our major zone. This is a refined zone using areas of supply and demand. So even here we had another minor break here of structure. Okay, we leave this zone here. Market's now come back into. So you'll be looking for the market to head back up to take this swing higher. Let's see if we do break up. We've swept the high. We do continue to break up. So you can see how strong this is in the market right now. So again, we broke up. Okay, we left this area of demand. We also had an origin area here I can draw. But as we can see, the market really came into that demand. You can see how we stack above demand zones. We continue up. So now we've wicked through this low, solid push down. If we continue down, potential reversal here. So we can see what's happened now. We've just took this area of demand. We've failed, okay, to hold, and we've dropped down. So now we have, okay, this area of supply. Now, why do we have this area of supply? Let me just show you. This is our breakout, okay, continuation, breakout here, drop down. Actually, let me just reverse that off. There's actually another zone, so we just show you. So there's this pullback, okay, a pullback here, broke this high here, a small pullback, continuation, breakout. That's what I'm looking for, that pullback. Sorry, I didn't quite mark it off correctly. So we'll be looking for the market to come back into this area to sell down to see if there's a reversal. Now, unfortunately, the market doesn't quite come back to this zone we've got marked, and we have the continuation to downside. Now, you're starting to see the process, how simple this is to find those areas of supply and demand when you start mapping out your charts. Now, all you have to do is continue to mapping those charts. You can see how we were mapping them out as we go along. Okay, there's a small pullback there, very small pullback there. We broke out, pullback, continuation, small pullback, continuation. So if you're looking at the charts like this is going to help you to mark them out. Again, area of supply, we have already come back and tagged that supply. So when we come back, we're going lower. We've gone lower, we didn't quite come back into it. What actually happened here? Again, we tagged this supply, this area here of supply was when it was used at this zone. We broke out of this area here. Okay, I'm not here to show you how to take trades, I'm just here to show you how to map your structure. Once we break out again this low, we create this area here of supply. That's a better looking zone for pullback into. So see if we come back up. And the market's very, very choppy there. So we have some lows all being wicked here. Okay, so potentially we can see a pullback yet. May drop out first. We've dropped out first. So what we can see here is that the market's held. Okay, now we've dropped out. So we've created a nice looking origin move here. Okay, you mark it off for that bullish candle. We have a small gap. I'd like to see the market fill that gap and drop away. So what's actually happened is actually removed it. So potential losing trade here with understanding the supply and demand. So we come down here. Okay, we've been this low here from this move up. Okay, push down. So the market here all this wick. Okay, what I've looked at is this as being our breakup. Now we've actually broken structure to the upside, removing this area, tagging to this area. So price has to go into something, okay, to supply to see that pullback. So again, what we saw above, we had that reversal. So potentially we've got this zone. We have this zone refined. So will we hold this area of demand? That's the crucial key. We've just wicked through this low. This area of demand, if it holds, we expect price to go up for this high. Now what this could be is just a manipulation of this high, okay, this last move down where we had all price being held. Now we need to look further back in time. Do we have a previous demand? There is a demand zone here, okay, which has held price up. Why are we seeing that removal? Now what we're looking for, remember, our swing structure. What is our swing structure telling us? Okay, it's telling us that we're looking for that pullback to be below this 50%. Now we've only bounced off that 50%. So we do really expect market one to go lower based on that area. So let's see if we get a drop. Okay, so we continue to go lower. So you can see how you can use that to understand when you're looking for those reversals. So this reversal is just a manipulation to push price deeper. Now you continue with mapping your charts, waiting for that pullback. Okay, so we got a pullback again into the area of supply. Let's mark it off. Okay, into the area of supply here. This one got removed. Okay, now we drop down. What we've now done, okay, is broke structure to the downside once again. Okay, and we leave. This is probably the best zone of supply, and we're looking for market to pull back again for continuation. So we actually broke structure again here. So if you're mapping the charts, you'll be doing this as your breakout, pullback, breakout. Okay, that's all you got to do is map those charts. Okay, look for that area. So area of potential supply. We have an area here of consolidation, great area of supply. But remember, on that pullback now, where are we? Okay, so if we're to see a continuation of swing structure, we need to see a reversal. The next area of demand is this zone. That's where we need to see the market bounce from. What are we seeing? Let me remove this structure now. We see the bounce out of this area. So we're likely to see the pullback. And there's your pullback. We manipulate through the high. Do we actually close it? No, we just had a wick through that high. So we have an internal structure here. We break this low, we'll continue to fall. But now, this is what we've been waiting for. Okay, so we have that pullback. This is mapping a structure here. Now we don't map it up to here, and this pullback, we go straight up. Now we're looking for pullback for continuation to go with that swing structure. So down here, we have an area of consolidation, good looking area of demand. Now, that is my preferred area because we also have here some equal lows, liquidity. So that'd be a good pullback here. We can see this. Now, at the moment, the market's not giving us that pullback. We have another break of structure. Now that's going to leave this here to demand. Big drop down. Okay, so that's our origin area. So market could come back down to here. We continue up. So you see how the market is now about to take this high. So once we see the pullback here, this is our swing structure. Okay, so there's my move up, there's our move down, there's our continuation. Looking for the market to take this high. That is the simple way of looking at your structures in the market. And all we're doing now is mapping out back to the upside. Okay, so there's our push down, there's our break up, continuation. Okay, and look, pull back and looking for the continuation of break. That's all we are doing. Let's see if the market can take out that high on a pullback. So where were we pulling back to? Well, this is not the greatest area of demand. Okay, it may hold. We have just now swept this low. So potential push up now. We could see a move higher, but it hasn't. And now we're going lower. So this still becomes my next area. Okay, where I want to see the market really come to. And again, this is now shown as that swing pullback. So internally, we didn't quite break that high. So It's not really a pullback there. But what we want to see is that continuation higher. And there we have it. So now we've actually pulled back, okay? Didn't quite get to that demand zone, unfortunately, but now we've broken that high. That's what we were looking for. So hopefully this gives you the context of how to apply market structure mapping. Now you may not be aware, but there's also that internal structure within those swings. And that's exactly what we will go through today, how you can mark up those internal swings. So understanding the two differences between the internal swing and the swing structure is important, especially when you're understanding where the market's likely to head next. So here, let's just forward this price chart. We're on the pound US dollar. Let's just go forward with price chart. So currently we can see the market has created this move up. So we have a swing low here in the market. We want to see a breakout. So we've got a breakout. Okay, so let's just go from this area. Understanding the market swings. So we look at the current swing here to the downside. Let's grab a tool. We've just broken here to the downside and we're making a swing pullback. Now within those areas, we're going to find that we have the market here. You can identify we broke this high here. We went higher, pulled back. We went higher again. We pulled back. We wicked through this high and eventually we broke this low here to the downside. We pulled back, broke lower, pulled back, and we broke out. And now we're having that pullback. So what we can identify within this move here, just this move we're looking at here, is internal structure. We have a previous high here in the market. We have another high. We have a low, a lower low. So what do we have here? We have a swing move in the market. Now within those swings, okay, we're going to have these internal swings. Now that is what we class as our internal structure. And it's key to be able to read the difference between these swings and the internal swings as well. That's going to help you to identify when the market's creating those pullbacks. Just like we're seeing now, a pullback is occurring on this move. We're looking for the market to continue lower. So what's going to push the market lower? Potentially areas of supply demand, swing points in the market. When I talk about swing points, I mean swing highs of liquidity we look at. So we have a swing high here. Potentially we could see this high run and then we could see a run back to the downside. Let's just let this play out. See what happens. So currently we broke this high, we pulled back into this low we've currently held. So we want to see a sweep of some kind of high, and let me just pause it there. So we can see the market internally. Okay, we came down, we pulled back, and now the market is making a higher low, but we failed to take out this high, which does suggest we will continue to go lower. Let's see what happens. So, okay, so we do actually continue lower. So we continue lower. So with a internal structure, remember the swings we were looking at the time. Now we have these internal moves inside these moves as well. So we can now look at this as a push down, okay, pull back here, continuation as a full swing. And we can also look at these movements inside where we see price here pushing up, okay, and dropping down as a fractal internal swing. Let me just continue forward. Once you understand how these markets are going to move with the swings, we can then identify we have an area here of supply. So this is what actually pushed the market lower. Now, as we just broke out of this low here to downside, we create a new area here of supply. So we can mark out a nice looking zone here of supply. We also have a drop-based drop zone here as well. So let's just forward this. So we have a structure, okay, internal structure now. We can identify as we break out of this swing move, we have this pullback here. So as a swing structure now, we can see we have a breakdown, a pullback, and a continuation out. So all you're looking for when you're looking for that internal structure is with it going with that trend. So for this move down, okay, we can identify this push down. We had this push up. Okay, we went higher, we wicked above this high, and then we reversed. So that internal structure went from a bullish to a bearish structure, which indicated once we broke this low, that the market would continue to break out this low. So let's just remove those off. So we're looking for the continuation lower out of this area of supply. So the market has removed that supply. Now, this had no liquidity to the upside. So very often you're going to see these highs run. This high has been run deeper into this main origin zone. Now, these zones are going to work better because we've got an overlap as well here than these first zones, mainly because we've got a nice swing pullback. Let's see, we get a run down. So we run to take out this low. So we run down, we took out this low. So again, look, this swing is basically doing this. Our swing structure, continuation. Now internally, if we now go closer into price, we can also pick up on these modes where the market is creating these swing modes. We broke out this low, okay, pull back, continuation. And you can see we have an internal structure. So how would we look for the reversal out of here? We can do what we class as a fractal structure. Now, this will help you to find potential reversals out of these areas. The fractal structure is what I class as the new change of character. And if you haven't seen that video, I really suggest going and watching it. It'll be coming up at the end of this video. So we can look for those fractal reversals out of these areas here to identify the market wants to go down to take this low. So we now have a continuation once again. That's we broke structure here to downside once again. So let's look at those structures. So what do we have? We have a breakdown, pullback, breakdown, pullback, another breakdown, and we're looking for a pullback. Now, obviously, we could continue lower here first. There's your swing modes. Internally, we do have this push up, pull back, okay, push up. We broke this structure here, and then we broke out. Okay, that's the current internal structure we're looking at. See if the market continues to pull back. Okay, so you can see from this point, the market, in fact, did push down, okay, pull back, and we continued lower. Just continue forward, so we continue to go lower, lower, lower. So that swing continues on its way. Now we have a pullback. So again, it's just, so we have this push through this swing, a very small pullback and a continuation, and now we're pulling back. So what we're looking for is here, this is more of a swing, a full swing down like this. But we can also identify is that the market here, okay, on a fractal nature, we're going bullish. Okay, so we're looking for that continuation higher. Market continues to go higher. And would we come back up to draw that zone out, but we do have an area here of supply. You can see how these zones are starting to stack. And you saw that on the mapping video, went through how we look at those swings. So your internal structure, okay, at this point, we went in, we don't have much of an internal structure there. It's more of a fractal structure. But we can see we broke out of this high here. We continued up, they pulled back, continued up, pulled back, continued up. So you want to see a break of this low to then show a pullback continuation. That's the sort of thing we'll be looking for. So there's the break of that low. Now all you need to see is some kind of pullback for the continuation to target this low here. Now, we're not always going to get a pullback, but we've got a pullback right there. So you can see there's that pullback. The market went quite deep first. And now we'll be looking for the continuation. How do we look for that continuation? Well, inside here, we have a fractal reversal, which indicates the market is going to go for this low. This becomes our lower high for an entry to go for this low. And let me just grab that tool to put this line back to where I said. So we're looking for a continuation lower now. Take out this low. We wick up once more. Okay, take out that high. And we continue down. So you can see how the swing structure continues to be bearish. Okay, there's your swing structure. And then we have this internal structure within. Okay, so the internal structure broke through. Now from here, we broke out. Now don't. Let's grab an arrow again. So pull back and we continue down, pull back, continue down. So you can see how the market continues to be bearish with a swing structure and an internal structure. So that gives you the indication how the market will continue to move lower. So once again, look, we're now looking for our next zones. You can see how these zones are stacking on each other like this. Okay, so we pull back into that zone. Again, here we have another zone I would like to see market come back to. So let's have a look at this one. We're looking for the move to come back. We have a fractal reversal, and we have to show you here, we have that push down, okay, pull back, push down, pull back. What do we have? We have a reversal of this high, pullbacks. We look for continuation pullback. That's what I see. That doesn't have to happen. We could see a run straight through the lows, but let's see if we get a pullback. So we actually got a run off the low first. You can see we broke this low. And we got a continuation. So at that point where we were looking for a pullback, we didn't get it. And that's keeping you out of losing trades because you're not going to jump into any trade. It looks like potentially this area here, the drop-based drop, is what held price and dropped down. Now, it's not a zone that I like to trade. This was a better zone. So for me, I would not look at taking that type of trade. So understanding those swings once more, look, we can see we have a swing pullback, a breakout, small pullback, continuation. Now on an internal structure here, we saw the internal structure here breaking down. Okay, we pulled back here. We may even had one there. I don't think we did. So then we broke out of this low, pulled back, continued down. Potential pullback. So that's how we're looking at those structures. Okay, so we didn't really have anything to go off internal structure reversal even, but we did obviously come off this area here of supply. So let's have a quick look and see if we get another pullback. And once again, you can see the breakout. We just drag another line. That one back. So we can see we have a breakout here. What does that now leave us? That leaves us another area of supply here. Now the market has come back to this zone. You can see how we're drop, pull back, drop. If we break out of this high, that's a reversal with the internal structure. So I believe we just about took that high. Yes, we did. So we have a breakout looking for pullback continuation. But we have another continuation lower. So what we have here on this scenario was a sweep of the market here, and we come into an area of imbalance. Now again, it's not the best location for a trade because even off this area of supply would have been better as well. So we have supply zones sitting below as an area of imbalance to be filled. We could still see a pullback to this area, and we actually break structure here again. This move here is looking more like a full swing move down, pull back like this, but we have to go with those swings. Again, let's just see if we get that pullback or continuation. So this is looking very, very much like an internal structure. So we got another breakout here. So this looks more internal. Let's just mark this one out. So we have push down, push up, failed to close this high, broke through, pull back, continued. The market's continued lower. Right, so now we got a small pullback, push lower again, and we get this break to upside. So potentially you're now seeing a reversal area. So what we got above, let's have a look quickly. Above we've got this area here of supply left over. We do have an area of supply here, don't really like it. It's a large area I mark off like this. Could push price back down, but it's very close now. Want to see that breakout higher. See the internal structure looks like it's reversed. What I mean is we got that push up there. So from here, look, we got a push up, drop down, a lower high and a breakout to downside. Okay, so there's a lower high reversal, and that's a fractal reversal. And price came back out of this zone. Now this zone is the last buy to sell move. It broke out. That's why I've got it marked. And again, that we do the same thing. We mark off this low, and you continue to follow price like this. So we look at the market here. where we've gone through, we can identify the swinging pattern. Now within those swings, we went through those areas as well, where we had the internal structure. Okay, so this one broke out, pulls back. Okay, so there's your swinging pattern to downside. You can see it's a nice bearish market. We can see how the areas of supply are holding the price. And then we just look for those internal structures where you can see the reversals within. Let's have a quick look to see if we come back to this area of supply or we continue to fall. So again, we have that internal structure on the way down here. So this move, we just pull this down. This is a full swing down, right? Still, that's our swing down. But on internal structure, we've continued to create these internal movements. You can see how the market continues to be bearish. Quite a deep drop there as well. So there is your full swing down, and that's actually still a full swing down on that internal move. And we just go forward quickly. So let me just remove this now. We have a breakout here as well, a small breakout. But if we look at this move, does this look more like a full swing push down? We have a small area here. That's an internal area. This is a full, okay, so even this move here, we didn't have this pullback. We've got this pullback. That's your swinging pattern. This is a very small movement where I class that more of a internal structure. Even this move here could be classed as one swing, okay, one swing, like that. That's what we can see. So we can say it's a breakout. There is a potential area of supply here. Price may drop out of. But I'd like to see it run through and higher. So we are running higher. And you can see now by following that internal structure, we're going to drop down, pull back. We've now broken that high. You could get a pullback continuation, and we may even remove these areas of supply, and we see a full swing reversal. So inside here's that internal structure. This is our swing movement now. So we can see the swings in the market. Okay, let me just draw this out for you. We've removed this area of supply, and we also removed this zone as well. We wicked through it. So they've both been taken out. That swing structure, okay, we've gone down. Like I said, you could even use this as a swing if you want, but it's more of an internal structure, and we've pushed out. So now we've broken the high. We're looking for pullback continuation. Now, if we look at the internal structure here, that's our push down, pull back, big push down. We broke that high here, went up, pull back. Okay, that's our internal structure. Now here we've actually wicked through, so you can see we went higher. We made a reversal below this low, and then had a pullback. So we could see a continuation lower for this full swing pullback. And let's see if we get a pullback. So the market did push up, and we're having that pullback. Look, see if we get a further pullback, just so we can see how this works. So it looks like we've got a pullback there. So we've got this swing pullback occurring, okay, on this move. And this is internal structure. And we've also got this movement inside, which is our fractal structure as well. And that's just gone bullish, the fractal structure. So this could now push us back higher. I'm just looking to see. We should take out the high. Yes, we will. Yep. So there is the previous high of the swing. And we just rerun it. So it was a short pullback. We didn't get a very good swing pullback here. Just remove that. We can then identify that we pushed up higher and we're broken out. Now inside here, you can see all these smaller moves, which is our fractal structure. And right here, I'd said just before we went higher, we had a reversal of fractal structure, pulled back, and then we've gone to take this high. So that's how we look at mapping those charts when we look at the swing structure, but more that internal structure. This video is more to tell you about the internal structure and how we look at using it on those charts. Remember, we look at those supply and demand zones as well. And again, once we remove those zones, we look at this area here, and we just quickly go to this area. Once we remove those areas of supply, our area of demand. This was an area of demand because it's the last sell to buy move. We broke out, we pulled back, continued up. Okay, and we have this run down here where the markets then broke out again, pulled back, broke out again. This is then another run down where we're expecting prices to come to. Then on the way up here, you can see we have these smaller moves where price pulls back into. Okay, I didn't go through all these zones, but you will have gone through the previous video. You'll see how I was marking those zones out. And eventually we broke through here, okay, which leaves me this area here of supply, where the market's gone down, back into the supply, gone back to take out this low. So you could add a sell here to target this low. Understanding now we've broken out, and then we've got a new area of demand. So we didn't quite come back into this demand zone. This level here of demand is the main one that's held price up. And you can see how you can easily follow price once you start to see how those swings, the internal swings, all work together with those areas of supply and demand when you're mapping those charts. This will replace the change of character. Now, if you're not sure what the change of character is, I'll briefly just go through that, and then we'll go through what the fractal structure and the fractal reversal is all about. So when we're looking at a change of character, typically we'll be looking at a, let's say, a bullish trend here, and eventually the market will make a reversal like this. And the change of character section is going to be where we see the breaker structure to the upside, where we're taking out those weak highs. We're supposed to have these strong lows here in the market, and eventually we reverse the market, making a new strong high and a new weak low. That is the change of character in a nutshell. So the change of character is going to show you that structure reversal. Remember the difference here. It's a swing or internal structure reversal. We're talking about a fractal structure. Now what this means is we're fine-tuning where we can look to take a trade, understanding we can actually improve our risk to reward, but also remembering at the same time this can also be a much higher risk trade to take. But if you take it at the right time in the market, the right placement, it can give you some great risk to rewards. So let's just back that off quickly. And let's start off with a bearish fractal structure. Okay, so the idea of understanding the fractal structure is what we're going to do now, the theory behind it, and reading the candle by candle structure. This will help you to understand what fractal structure is. Later, we'll quickly briefly talk about the use of the fractal reversal and how you use that to look for those trade entries. Now, of course, if you want to learn more, okay, which means through this video, you want to learn more on the fractal structure and the fractal reversal, then don't forget, drop me a comment below this video and let me know you want to see more videos understanding how to use the fractal structure. So let's look at understanding how we read fractal structure. So what we're looking for is for the continuation of the previous candle's high or low to be taken. Okay, so in a bearish fractal structure, we'll be looking for the low to be taken. So it's not until we break through this low here in the market, we make a lower low. Okay, it doesn't have to be a close, it can just be a wick to downside as long as we see a lower low. We originally broke up here, leaving this low in the market. We then failed to break this high, which put us into a trading range from this high to this low. You can see how tight of a range this is with just 3 candlesticks. And then eventually we break to the downside here. We then failed to break this low once again, and we break to the upside. So we have a bullish pullback on a fractal structure, and we still then have a new, okay, this area here, this low becomes our new, okay, range high, and this becomes a range low, and we're either looking for the break to the upside or the break through back to downside. Everything in the middle we're not concerned about. We just want to see the fractal break to the upside or to the downside. We failed to break the high. We actually closed through the low and took out the fractal low. This then gives us a new fractal high here for trading range. Now we can't mark out this trading range until we see the fractal reversal area. And what this means is, let me just back off some of these lines. We see a continuation to downside, and again another continuation to the downside. Until we don't close through the low or wick through the low, this candlestick, then we can look to mark this off as a potential range. So as soon as we see this candlestick close, that we failed to break this low, we have a new trading range from this high to this low. And again, we're not worried about all this price action in the middle. We're looking for continuation to the upside or to the downside. You can see we failed to break this high once again. We closed to downside, or we wick through to downside, whichever it is. We close down again and we go to the downside once again. And see, we continue to be bearish here until we get that next candlestick which fails to close or wick through the low, which we do right here on this candle. We can then draw this previous fractal high to this low, okay, as our trading range. Once you understand that, anything inside here we don't care about until we see the move to the upside or the downside. So price basically closes on the very next candle to the downside, breaking the structure low and continue with the bearish move. So let's back some of this off. And then what we have then, the next candle closes or wicks through to downside, but then the next candle fails to do that. So once we see this candlestick close, again, we can mark this off as our range high, and this will be our range low. The next candle goes high once again, and then eventually here we break to the upside. This is what we class as our fractal, okay, reversal in the market. This area here. Now, we don't have to wait for this close or wick through. In fact, we don't even have to wait for the close of that candle. You can watch this in live market conditions. What I mean by this, while this candle's still open, as soon as you wick through this previous high, okay, that indicates a potential reversal. And we can then start looking for an early entry with that market. Now, when we use this type of fractal structure with a fractal reversal, we're mainly going to be looking at it on a pullback against the trend or with entry with the trend. It's best used with entry with the trend, okay, understanding the use of multiple time frame analysis, swing internal structure, and combining it all together. So back to this fractal structure, okay, so that's how we understand the use of a bearish fractal structure. We just want to see the continuation of price taking out the previous candle's low, okay, until we don't take out that low, then potentially we can create a fractal reversal point in the market. So let's now take a look. We've gone through the bearish fractal structure. Let's now take a look at the bullish fractal structure. So on a bullish fractal structure, we're just looking for the opposite. Where we're looking for the continuation to the downside for that bearish structure, we're looking for the continuation to the upside. So here we can see that we have this previous candle's high. Okay, we failed to close through this high with this candlestick. And the very next candle, we do close up. This creates, okay, a potential reversal point, okay, or a previous range or an area for a range as soon as we see a fail again for continuation. So we can see we close up once again, we close up, or we wick through, should I say, above that previous candle's high, but this candle here fails to take out this candle's high. So once we see that, we can mark this off as a previous low, a high, we have our trading range. Again, we're not really bothered about what's happening inside here. We just want to see if we either go to downside or back to the upside. So as you can see, the market does close back above, okay, and again, we break this high and we close back to the upside. And eventually here we failed to take out this candle's high. That gives us a new range from this low to this high. Now hopefully you've also seen previously, we don't have to create a pivot point, okay? This is not a pivot point for a fractal low. So understanding that will help you to understand how we're reading this candle by candle structure. We don't have to see like a pivot like this to create that reversal point. Okay, that's our fractal reversal level. So we can see we continue up, we fail to close up, this becomes our trading range. We then close down, so we have a bearish bias at that point, but it's a pullback within this range. Now, as soon as we fail to close down and you see the market closes back up, okay, we then continue up, we take out this high, and this becomes your new fractal low. Now again, you see we break up, we failed to break through this high on this bearish candle. As soon as we see this, we have a new range right here. Now straight away on this point, we can see the market just goes straight back to the upside. We break the candle's high and we take out that range. So now we have a new range, okay, as soon as we have that fail of breakout, so this candle's high was failed to break out in the next candle, this becomes our range low to high. Now you can see how a tight of a range this is and how you can actually find some high probability trades once you see this. So again, look, the market fails here to take up that high, and eventually we do actually close higher here, but then the next candle we break through. Remember, everything in between the range we don't care about. All we want to see is a break to the upside or the downside. This break to downside confirms a potential reversal in the market, and that's where our fractal, okay, reversal comes from. So once you understand that, it's going to help you to read those entries. And like I said, the fractal reversal is only really going to be used out of a multiple time frame area of supply and demand with the use of the different structures in the market. Now, coming in the future will be different videos to understand the use of market structure in more detail, but this is the starting point for you to understand this is what's going to change that change of character. Forget the change of character. Fractal structure is the way forward. It's going to allow you to find and pinpoint those reversals in the market. And like I said at the beginning of this video, if you want to see more videos on the use of fractal structure, and I go through in more detail how we're going to apply this when we're looking for a trade, then drop me a comment below and let me know you want to see more videos on fractal structure. Market mapping out session for you today, going through the daily time frame, showing exactly the best and easiest way to mark out and map those charts. So one of the easiest formats to do when you're looking to do this is to zoom right out. Look at that bigger picture. So we can identify on a bigger picture then where our major swings are in the market. So we can actually see by doing this is that we can see we have a major swing down, pullback, continuation, pullback, and continuation lower, and a pullback. Look how quickly and easy this is to do. That is all you really need to do when you're looking to map your charts, that we have a pullback here, continuation within that zone. Now you could even look at this as one full swing if you wish and a pullback. But we have inside these areas what we call internal structure. Okay, so we have an internal structure within these bigger swings. That is the most simplest way for you to start looking at mapping out your charts. Now we've got straight into the core of this video, because you need to understand, without understanding true market structure, you are never going to succeed as a trader, because you're going to find that you're going to mess up mapping your charts. So we just went through quickly how you mark out those major swings in the market, and they are crucial to understand as well where the market's going. Then we're going to have in here, okay, these swings I'm now marking. What these are going to be is your internal swings in the market. You can see we all the way down, and then we come all the way back up to take out this high, and I'll be looking at this as a potential move. In fact, we may even come straight down and bullish move up. You can see how quickly I'm marking this up. Now look, imagine you are looking for your structural points. You are looking for your supply and demand zones. It all works. You're looking for where the market's going to want to run the next liquidity area. Everything will come together once you mark out and understand the correct way of market structure mapping. And this is the way you need to be doing it. So look, I've just quickly gone through. Now, once we've done this, we can start to identify those breaks of structure. So we have a valid break of structure here. So let's just mark this off. We then have another valid break of structure here, and another one here, and another one here. And eventually we have another one here. So let me just tidy some of this up. So you can see how quickly you can identify those breaks of structures just by doing what I'm now showing you. So we have a break of structure there. Let's just continue marking these off. Yeah, so we most probably would have had a single pullback here using this as our swing high, and that'll be your break of structure. So there's been one single pullback, and then we'd have another break out here. Let's bring that back. We have another breakout there. And currently the market's come down and we're seeing a pullback. Now, even within these swings here, we just shrink this back out. We can identify the bearish bias. We reverse, okay, bullish. continue bullish, and then we reverse bearish. Why do we reverse bearish? Because look, we create a break of structure here. We break down and we're seeing that pullback. So this is our current pullback in the market against this move down. But again, this even has structure within it. And if you don't recognize these structures quickly and start understanding why the markets are moving on those locations, then you're never going to understand the true formation. So look, when we see these breakout points, here we have a nice push down and a reversal. What that down does, it puts us into a bullish bias. But a bullish bias on what? Let's zoom out. A bullish bias on this larger swing, okay, when we break this structure on a pullback. There's your swing pullback. So what do we now expect this pair to do? To continue down to take out our low. So there's how you map out, okay, your larger swings with your internal structure within it. So that is a simple technique, okay? Very quickly, you can achieve this. Just follow along on this video, go back and go through it a few times. I'm sure it's going to sink in. Now, even this move down, okay, we then have a single pullback. Look at the price action here. We even have structure within the pullback. And you can go through your time frames all the way. So look, there's our structure, and now we've broken out. So there is a break. So I'd have a breakout here that I can mark. So we can mark another breakout. I'll tell you what, I'll mark this off as a IBOS. So we have the reversal from this bullish move, okay, to the upside, to the downside. So what does that now tell us? That tells us we're looking for a pullback to continue short until we remove this low, because this is our last low, okay, where we see the pullback. So we then have this swing pullback continuation. Notice how we have inside these moves our structure. Notice how we also have structure, okay, inside these swings. So we have our larger swings with structure within. We then have our swings within this structure with swings within. So you have trends within trends. Look at it that way if you're not quite sure. And when you combine all this together, this is just one time frame. Get your head around this for a moment. Imagine having multiple time frames using this type of method. Once you understand the way to apply structure in the market, the way to map it out correctly, once you can do this, go away, do an exercise, come back, leave a comment on this video and tell me how this has massively improved your trading by creating these structure points on your charts. Like I said, once you have these structures, let's just remove this. Once you have these structures on your chart, what does it then show you? It shows you where your areas of demand are going to sit, okay? Understanding the last sell to buy a move here. Look, last sell to buy a move. We come back into demand, come back into demand. Again, here, our last sell to buy a move. We break up, we come back into demand, we continue up. Our last sell to buy a move. We come back into demand, we continue up. Look, we can keep doing this. Our last sell to buy a move. And that is the last demand. We're currently now coming back into, continued up to break structure. This was actually about there, our zone. So we came into the demand, pushed up, and then we broke out of this current zone just now. We're deep into this demand, but we expect this demand to be removed next. But look at how mapping your charts not only shows you the direction with a market structure mapping, but also shows you how to draw the zones. And on top of that, it's also going to give you those swing points, these areas where I'm going to create a liquidity grab. All of this, I'm going to need future videos to go through for liquidity and then supply and demand zones. But there is already some great videos in the channel. I'd check them out right now. As soon as you've gone through this video, they're going to help you to understand. I realize that many traders out there do not understand how to find that directional bias. So I'm going to show you on the pound US dollar on the daily time frame, 23rd of the 1st, 2024. We're going to go through how we look for that directional bias. It's all about understanding your market structure. But the key concept is we're going to look at some areas of structure in this video again, but with the use of imbalances as well. Understanding the imbalance in the market is going to show you where those hidden orders remain. There's hidden blocks of orders which need to be filled or run through as liquidity. So if we look at the last move here to the downside, this move here, this shows me a break of structure. So as a swing structure, we've broken out to the downside and we're looking for that pullback. So understanding a larger swing, we're looking for a pullback for potential sell back lower. And we just mark off this as a strong swing high, and this would be our weak swing low. So potentially we're looking for reversals now to target this low. Now the way we do this, we understand the use of supply and demand. We're looking for that last buy to sell mode, which is this big buy up here to the downside. So for me, anything that comes within this zone, as a larger zone, is where we can look for those reversals. Now we can refine those zones as well, but understanding the last buy to sell move is important. So when we see the market down here, as we see the reversal comes as we see this minor break here to the upside of this internal structure. Now at the same time, how can we know that the directional bias is changing? If I zoom in, if you've not ever gone through the use of imbalances before, then this should help you to understand how you can apply it for that directional bias. Now the imbalance is created when we see a momentum move. So you can see this big bearish candle drop away from this pin bar. When this happens, from the low of this candle here to the high of this next candle, when it's closed, this candle, it creates this area left over. This is an area of imbalance where we see the blocks of orders remaining, where either they're going to be run, okay, or they're going to push the market back lower. Now on this occasion, the market is run through. Once we see this candlestick closing through, this is taking and clearing out those orders, and it gives us a directional bias as bullish. At that point, we know the market will want to run this swing high. When the market closes through that swing high, it changes our directional bias. Now we have a bullish bias, and we also expect that the market is going to do a swing pullback. So once we've seen this reversal, we know that the market will want to do a pullback against this swing to then head back lower to take out the weak low. And that's exactly what happened. From this point, we can see the market has made that pullback. So let's go closer again into that and see how we can read that directional bias with those imbalances. So now we know that this is the imbalance with reverse price. We also close this swing high. What we then need to do is look for our next imbalances, and we'll mark those out on the chart. So we have an imbalance level here. The next imbalance level is above. And do we have any more? So we don't have any more imbalances until up here. So that's my next imbalance level. And that looks like that's it for now. So they are the only imbalances that we currently have. So pull that across. So once we see, you can see the market, once we broke out of this swing high, we knew the swing pullback was going to occur on that time frame. We come into this area of imbalance, reject it, refill it to the pip. So we expect the next time the price comes to that area, we will close through. This pushes the market back down. So what this imbalance has done is basically it pushed the market back to find an area here of demand. So in theory, we have this area as a demand zone, and we can refine that zone down to here, where the market pulls back in. So this is where you can potentially look for an entry, a counter trend entry, sweep below here, nice looking pin bar, and we target to take out this imbalance. So if you was using this as a directional bias, we would look to go long here to fill this imbalance and remove it. As we already filled it once, we expect it to be removed, but that will be my target just over a 3-to-1 risk reward. Now, once we close that imbalance, we expect the market to go to the next level. This is the next level, and we can close that at the same time. So our directional bias is still bullish at that point. Now we can look for the next area. So we do have this as our last buy to sell move. So you can see that the market pushes down here and we buy away. Now we can refine that to this area here, which again is a new sell to buy move, which broke this area. And you can see the market comes back into this area. Nice looking rejection candle out of there. A doji as such with a nice bullish move away. So at that point, that signals to me that we look to go long once again. So from here, we would look to go long and we can target the next imbalance, which is this one here. And see that gives us over 3 to 1, nearly 4 to 1 risk to reward. And that's how we look at that directional bias. We keep going with the market. At this point, the market's gone up, we closed through, okay, that area. So that means we're going to go higher. So now what you can do is look for your next imbalance level. And we also need to incorporate swing highs and lows for the next area of imbalance. If we look at this market, we have a very, very small area here. Very small area of imbalance there. We have another area of imbalance here. And a very small one above. But we won't mark that one. We'll just mark these two out for now. So as we've now closed through this imbalance, we expect the market to want to go for this imbalance next. And where does the market head towards? It goes for that imbalance. So once we see this pullback, we'll understand we're looking for our areas. There's our area, which is the last sell to buy move. And we can map this out by understanding structure. And it's important that you understand your structures in the market. We do have a very small structural pullback there. And that's what causes that market to continue higher until we get to this imbalance. Now notice when we got to this imbalance this time, we did not close through. We rejected it, and the market, in fact, has pulled back to this low. And I do believe we just closed through by a pip or so. So at this point, potentially the market could well be coming back to an area where we could see this swing to reverse back to tag out this weak low. And that's essentially how you look for those imbalance zones for that market direction. Once you understand the market structure swing you're within, this is our current daily swing. And we also need to understand this is our internal structure, reverses that high, which gives us this reversal. And now we know the market has been bullish. Now you could use this as one full swing to here and a pullback, and the market continues bullish. So once you understand the directional bias with the use of your market structure, and again, watch that video coming up, which goes through the mapping of market structure and the use of supply and demand zones, and you incorporate the use of these imbalances for market direction for the bias, it's going to help you to start finding that true daily directional bias. So again, until we actually close through this area of imbalance, we will not go to the next one, which is above. We don't have to go to fill that imbalance, but the orders here could be the orders inside this area of supply, okay, which pushed the market down, or we could just push down from here. So how do we know where the market's going to go next? Quite simply, all we need to see is the reversal. So again, here we had this push up. We just broke that high with that bullish move, and now we've pushed down. Now we'll check in a minute, see if we actually closed that low. If we did, then we're looking for continuation to downside from here. Let me just double check this for you. So we have a low of 1.26124, 26105. So that did indeed close below the low of this candlestick. So at this point, we have a bearish bias with market structure. Now, looking down here, where's our next area of imbalance? Well, the only imbalance we have left over, the first one is this move here. Now, that could be where we can see the market want to head towards. Now, if we look at current price, once we get to this point, the market pulls down, we break, we do leave this area of imbalance. Now, that was removed through with this candlestick. So I would expect to perhaps see the market want to run this high first to take the liquidity, perhaps to fully fill this imbalance, as we didn't fully fill it, and then look for another drop. Now, of course, if we do go up there and we close through, that means we're going to go up to the next area potentially. And that's how you look for directional bias. And this is not something that anybody really teaches. You can look around on YouTube. You're not going to find somebody who shows you how to use these imbalance zones in this type of way. So we have the structure of the market where we look at its swing structure. We're going to look at internal structure here and within that swing structure. So when we're talking about swing structure, we can look at the bigger swings in the market. So when I mean large swing structure here, we zoom this chart out on this 4-hour time frame, and you can identify these larger swings in the market where we can see price has broken the downside, this last low, pulled back, and potentially we're seeing the market continue another move lower. So understanding market structure in this way and how to map your charts, there is a great video I'll leave at the end of this video for you to go through and watch exactly how you can map your charts. But this is to teach you how to read structure just with that line chart. Now, looking at these swing points, if I mark this out, okay, on a, let's show this on a weekly, if we go to a weekly time frame here, and let's zoom back out, look at the line chart where we've mapped this chart, okay, we can see that we have the same pattern, okay, with the line chart. So using multiple time frames with the line chart will help you to see these swings. So we're looking at the 4-hour time frame, but we can identify where we have that swinging pattern on the weekly time frame. So it's going with the actual 4-hour. We can see we've had a break of structure here. We're probably going to have an area of supply here where price is pulling back into now, and we're looking for a continuation to take out this week low. So that's how we look at market structure or break of structure with the line chart. Now, if I go back to the 4-hour time frame, when we look at the swings here, we can also identify, okay, within these swings here, okay, these moves down, this is the largest swing we're looking at. So we had this is a larger swing, and there's a breakout, okay, broke this low, lower high, and now we're looking for a continuation to take out that week low. We just saw that on the weekly time frame. Now we can also identify the swing on the move here. We can see a break of structure here to downside. We have another break here. In fact, let me zoom in, make this a lot clearer when we're going through this. So reading these swings, okay, we have all this in here as well. This is still looking a bit messy on the chart, okay? So how can we clean this up? How would you clean this up? Let's go to a daily time frame. And let's have a look at these swings now on a daily. So let's go back to where we were. Okay, so now we can identify that we can see these moves within this area using the line chart. Okay, let's forget about this move up. Let's just look at this move to downside. Okay, now we can identify quite quickly where we have these moves where we can see price goes up, we break structure. Okay, we do manipulate by this high, break structure. Okay, we have a small pullback there, continuation. Okay, so you can see how we can easily see this on the daily. That's why it's important to understand multiple time frames. So let's say we look at this low here to start with. We have a break of structure here to downside. We have another break of structure here. Then we have a break of structure here as well. Then we can move down and we have eventually another break of structure here. Now the reason we have this break of structure because we rarely see this as a swing move down pullback. We have a minor break there, but we look at that of a full swing is this one here. You need to read those bigger swings. We have another break of structure here. And eventually we have a break of structure here to the upside. Oops, let's put that back. So look, that's how we can read very quickly with this line chart. So we can see we have a breakout here to downside, another break here, another break here, and we see the continuation of that structure. That's our break of structure, okay, line chart trading strategy. So if we now go to the 4-hour, let's just see if we've marked those lines out correctly. Okay, so we haven't actually marked them out. Let's go back, let's just remove these ones. And let me just go back. What I meant to do here was actually mark these out so they were on the 4-hour as well. Obviously they're not on the 4-hour. No, for some reason they're not. So let's just change these quickly. We've already gone through the weekly, and we can see how the weekly helped us see the larger swings in the market. Then we've gone down to the daily, and now we can see that this weekly time frame was this swing here to downside. Okay, then we can see these swings here is that internal swing structure, okay, on the daily within that weekly swing. On a 4-hour time frame, we can see this when we come out of the chart. Now we can see this movement here on the 4-hour. We now go inside here. We're also going to see on these moves, we can now just fine tune where these are. So we have a break of structure there. We had a break of structure there we marked out. We have another one there. Now we can identify that we obviously had this manipulation here. Okay, let's push up and then a fall down. We then have, let's mark these out. We had another break of structure there we had on a daily. We had this break of structure. This one's in the same place. And then we have this as our reversal. Okay, so even on these moves here, we can identify more swings. Now we class these as the fractal swing here, but we can also look at this as our major swing down, pull back, okay, break out, pull back, break out, pull back, okay, break out, pull back, break out. All right, we can see how the market's doing this move here, breaking that structure with a line chart. Now on the way back, we have these smaller swings in here. So zoom into the first bit. So here we have that breakout. We then create this small swing here where we see the market reverses. Okay, right here, we pull back up, we come back, and then we have the swing of the high, break of structure again, right there, and then we break back down lower. So here we know the market wants to then charge for this low. We then eventually break that low, we pull back, and again we can see that we break this structure here, come back to retest it, we then another break to the upside, and then eventually the market then comes back, we break out. So this is a quick breakout. We then had a breakout here lower, then we push back up one more time, okay, to take this high before we break this low. Let's have a look at what price looks like on the chart. So when we have price on the chart, reading the market like this, we can see the big break here to the downside. Where we create that swing low, we pull back for that lower high. We can see the price action here. We have a nice bearish engulfing pin engulfing candle where we could take an entry, understanding this area, targeting this low, market hits that profit target. Okay, we then have this reversal down here. We can see again a nice pin engulfing candlestick to show us the bullish move. We push back up this high, pull back, make a higher low, and eventually we break this high. We wick through this high, okay, here, and then we drop through and break structure again. So it's reading the candlesticks with those line charts. We use the line chart first to quickly identify those areas. We're looking for those break structures. Again, here we can see the market breaks through. We create that pullback. A quicker look at price. We can identify here. We sweep this high on this candlestick. We then have an engulfing candlestick here. Okay, pin engulfing candle. Now you'll hear me say that pin engulfing very, very often. That you can sell on this candlestick. Bring that down. We can sell on this candlestick, targeting this weak low down here, or even this area marked on the actual line chart. Nearly 6-to-1 risk to reward, so a pretty good trade once you start to reprice. We break out again. Okay, you can see the internal structure here on the way down. Okay, we have a break, pullback. Okay, continuation of internal structure. Then the market comes back higher, and we break out again. So it's understanding reading these structures within these structure breaks. So again, every time price pulls back, we're going to do one of two things, okay, or one of three things. Price is either going to pull back to a swing high, okay, to look for that liquidity, or we're going to pull back to an area left over imbalance to look for that liquidity. Within these imbalance zones, there are leftover orders, or we're going to pull back to an area of supply, which on this occasion, we have the last buy to sell move here. Okay, the market didn't quite get to the actual area of supply. So you need to understand these three things is what gives you a potential trade. Up here, we see price decided to take out a swing high. And that's why we see the market creating that reversal that we've seen. Up here, we have the same thing. Price runs these actual swing highs and it actually runs this area of imbalance as well. So the market here, again, we can identify that we break this structure we've identified from that line chart. Okay, and the market actually continues down. We do leave here, okay, this last sort of buy to sell move before we break out. This is our true zone up here. And you can see the market does tag that zone and we drop off before we break to the upside. And eventually we see here where the market does make that breakout. Now this is where we saw the line chart breakout here. We've pushed up. The market's come back, made this higher low, and then we break out to the upside once again. That's where we see that full trend reversal shift there. So let's now just look at the line chart once again. To quickly identify these zones is just looking at the major swing. So there's a major swing, okay, pullback. Major swing, okay, there's a pullback, breakout. Okay, so all you're looking for in marking these out, again, from this high, there's a pullback, there's your continuation, that's your break of structure. You're just looking for those pullbacks. Even this area here, that's a pullback continuation, it's a strong continuation. That's valid. Here we have a pullback continuation, and then eventually we see the break to the downside. So we see the full reversal. Now looking at this, I would actually look at this as more of a full swing down and then a swing up. So that's one big move with a new breakout to the upside. Now we're looking at daily. This will probably look a lot more clear. So we'll just go to daily structure quickly. And there it is. We can see these structures a lot easier than we would on the 4 hour. But you can so easy, you can still see these on the 4 hour. There's that breakout, 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 breakout. You can see all these structures are easy to see and mark on this time frame. And even here, you can see we do have a small breakout there, which we're not really going to consider that as a area. We did have one here, but this one looks more of a push down, push up. Again, price would show you that on the chart. But that's how you can quickly and easily identify those areas, by just going to a different time frame. But on the 4 hour time frame, which is one of my time frames of choice, this is where you can start to look for the entries, understanding those areas we want to take a buy off. On this occasion will be off areas of demand, areas of imbalances, all those swing lows in the market. So we just put price back on the chart. Let's go back to this area. We see the reversal. Yes, this is in hindsight. Many people will be saying, this is in hindsight. This is in hindsight. Yes, but this is the best way to show you quickly how to do it. So we're looking first for the areas of demand. So we have an area of demand here. We see price pull back into it and broke away. We then have a breakout. This is another origin area of demand here. Okay, price comes back into it quite a few occasions. We have another breakout. We have another origin area of demand here. We don't come back. We have this as another breakout. So we have a new origin area of demand here. Okay, let's just mark out all those demand zones. Again, this is my, I'd say this was my area. I think there's a bullish candle in there. Then we have another breakout here. Okay, so the last sell to buy move would be here. And then eventually that gets removed. So now if we look at how price reacts here. So we already have this push into this area of demand. And then we break up. Now it looks like what happens here is price finds some area here. We didn't actually go deeper into that demand. Okay, but perhaps it came back and found something there. For me, there wouldn't be an entry based this time frame. Now on an internal structure, we can see that we shift structure here, breaking out this high, which does leave, an area of demand that we could draw within this zone here. We expect market to come back to. Now, it does come back and we continue to go higher. Now, we also come back into this zone once again, and we can use this last test as an area we can look for the market to want to go deeper into. Okay, so that's taking out a swing low. Okay, so remember, we're looking for entries off demand zones, off the swing lows, okay, or off the areas of imbalance. And again, the market does go higher, fails to break out. What do? We come back again and we take the swing low. And that's how we end up getting this pin engulfing setup candle. And again, like I said, these candles, you'll hear me say them over and over because they are the best setups. And we can look to target this high and continue further with the trade. So once again, price here does not come back to this area, okay, on the swing low or this area of demand. But what we do come back into this time is this area of imbalance. This is what we class the leftover imbalance. The true imbalance is from this close of this candle to the open of this candle. But on this occasion, we can see this is the current imbalance, which is left over. Now we look for the imbalances to hold at the high, the 50% or the low of the zone on this bullish move. You can see price holds at the 50%, lovely on this area of imbalance. And we also take out a swing low where we have this sweep. And then we're looking for the pin engulfing. Well, let's go closer in. What do we see here? We have a perfect pin engulfing candlestick. See, these candlesticks will work time and time again. Now, if we're looking for that swing high first for your target, 3 to 1, then you let the trade run. So again, we have a next zone. We have an area of demand. Price didn't come back to this demand. What we actually did, we actually came back to the area of imbalance left over here. We then also swept this low and we created this pin engulfing stick. So many people may call this a hammer, whatever it is you call it, but we can see we have this candle. I don't personally like the look of it because it hasn't got any body, but again, you can see it works and price does go up. So you'll be looking to take out the high first, just over 1 to 1 and let the trade run. Then we create an area of demand. Now this is the first time I think we've actually seen price come back to a demand zone here. We come into this demand zone, okay, react off it, and we go for the high. And eventually we break out and we see that reversal. Now we got all this information to start with though by going to the line chart to see where we can mark off these break points. All about that breaker structure area that we're looking to trade from. So finally, let's just look where the market does come up here, and we're going to create this major swing. This is going to be our breakout point. We can just broken through. We can also identify within here, we have the other swinging pattern where we can see where break to downside. Okay, market pulls down, breakout. We made a new high there, and then we create this new breakout here. So we've got the move down, pull back, continuation. Again, if we went to a daily time frame, I'm pretty sure you'd see this better. Yep, so on a daily, we can identify there's that breakout, push down, okay. There's some more of internal area here. This is more of the pullback and then the continuation. So we do have that within this major swing, okay. So this is what we call the internal fractal swing within that internal structure. So here on the 4-hour time frame, let's now go back to price. Remember, we're looking to see if we have price coming off a swing high, area of imbalance, or a supply. So when you go to look for your areas to take a trade, those are the 3 points you need to be looking to mark up. So first, let's look at this first push down. We go from this high, that's our last buy to sell move. Okay, so that's going to be from this low. Price just about test it to the pip there. Now we also have within that area, we can mark up an area of imbalance, leftover imbalance sitting right there where price does go into it, and we can mark off this swing high. That's more of a push through, pull back. There's no pin engulfing candlestick there. We do get an engulfing candle there now. You can see that engulfs that candle on the pullback, and that could have been an entry that you could have taken. So lower high, engulfing candle. The wick to downside is a little bit long, but we can see the market does run for those weak lows and just over 2 to 1 risk to reward. So there's that first area. We then break out again. When we break out, now we do have this as a full area. This would be a valid buy to sell move here. But what we can do, we can refine that area, okay, to the last bullish candle. This last bullish candle here from the swing high, which breaks this structure here to downside. We do pull back. What we create here is then some equal highs of liquidity where we expect market want to run. So the market pushes through that liquidity into our area of supply. Now we have no area here of a swing high because that's above price. We do have these swing highs run here, and we don't have an imbalance either. But you can see this time it reacts off this double swing high and this area of supply. So again, we have another breakout here. What do? This is current price. We mark up the last buy to sell move here. That's our area of potential supply. We then mark off our area of imbalance. This would be an area of imbalance we can mark off. We do also have another imbalance here where price has just reacted off. So the market has pulled back to an area of imbalance. We then have our swing highs. Okay, so we have a swing high here, which has already been run through. Then we have a smaller swing high we can mark off here. And what do we now have created right there? We have created a bearish pin engulfing. So understanding this structure now in the market, what do we expect? Well, we do expect the market want to run this low. You could potentially look for an entry off this candlestick, but let's just use the sell one, sorry, not the buy one. So you could look for a sell of this candlestick, but look at the risk to reward. Just over 1-to-1. The risk to reward is not great enough. So I would not look to take this trade. If this entry had happened up here and we was looking to take a trade off this area, let's say up here somewhere, and we have nearly 2-3-to-1 risk to reward. Again, I've done it. I've got the buy instead of the sell. Got the sell. Let's say we have a sell up here, same sort of signal. We have a 4-to-1, 3-to-1 risk to reward or something like that. That's a better setup to take. So always remember, you look at your risk to reward. Do not take anything under a 2-to-1 risk to reward. So that is how we can use the line chart. Okay, break structure, line chart trading strategy. Then you look for your break structures quickly, then go to your charts. You can then confirm it with price on the chart. You're then looking for those areas of supply, those areas of demand, there's imbalances and those swing highs and lows. Once you've done that, a simple way to look for an entry is just looking for that pin engulfing candlestick. This is a valid pin engulfing, and you could potentially see this run this week low. There's no reason why this couldn't do this. We swept this high, we feel this imbalance, and we could see a drop to the downside. But like I said, it's not in the best location. Back here, we saw some other trades we could have had like this on the way up. Let's have a look, see where we saw a nice looking candle here. We have at least a 2-to-1 risk towards the high, I believe there. And we had a lovely looking candle on the way down here somewhere. Well, one, we had one here. Okay, nice one. And we did see one we were looking at. Where do we see that one? This one here, I believe it was. This is a nice pin engulfing. The pin engulfing is one of the best candlesticks that you can use when looking for these trades. We had another one here out of this area of imbalance, that pin engulfing. This was a pin engulfing. This was off an area of demand. And that's how you look at using the price action, these candlesticks with this type of strategy. How do we improve that market structure trading strategy? Quite simply, we just add in multiple timeframes. So right now we're on the monthly time frame of that USD pair. And what we're going to do, we're going to look at the use of the monthly time frame with the daily time frame here. So we're going to look at applying the daily as your entry chart and using the monthly as that setup time frame. Understanding market structure on both will help you to identify an entry. So we can identify here that the market has been bearish as we break these lows, we pull back, we continue to break lows again, we pull back and we break these lows. So on a swing structure, you can see that we've been bearish. So let's look at this last area on the chart where we break through this low. Let's make this a solid line and a thicker line. So we can identify that we have a nice solid breakout here, leaving this as our swing high. And we have this lower high formed as well. We then continue to make this pullback and we make this low here. So what we're going to do, so what I'll do here is we'll go quickly to a replay mode and we'll mark it in from here. So this will be easy for you to understand when we're using that multiple timeframes. So what we're looking at again is this swing structure is this. This is our potential pullback. We're looking for a continuation to take out this weak low. Now we also have within this is internal structure. So you can see the market's making this internal structure. Now, what do we need to see for a reversal is this low removed, then a pullback continuation. So this is how we can look for that early reversal, understanding that reversal of internal structure. So if I just go forward and we'll replay this, let's pick it on a play mode. In fact, let me just speed this up and see if we can break out. Okay, so we look like we may break out here. And as the market does continue down, we look for that pullback. Now, as we break out here to downside, we create this area here, which is our last area. We'll place that as a monthly zone. And let me just pause this a minute. So just to show you what's happening, as we break this structure here to the downside, now we're breaking it. This leaves this area of supply. This is a last buy to sell move. So that's where we're looking for understanding structure. We're looking for that continuation down, a pull back into this area to look for sell to remove this weak low. So how do we look for this? Well, we're looking for the market to pull back first. So let's look for the market to pull back in. And then we'll go down to the daily time frame where we'll apply the same technique of market structure to look for an entry out. And this is how you can look for a much higher risk to reward. Because if you think about it at the moment, let me just grab this. At the moment, we have this area of supply. If we're selling off this supply, we'll stop above the high. To take this low, all we've got there is just over 1-to-1 risk to reward, which isn't really good enough. We need to be seeing at least a 4-5-to-1 risk to reward. So how we do this, we wait for price to come back into our zone. Okay, so now we can see prices pulling back inside the area of supply. Now what we need to do is we need to go down to a daily time frame. This is where we start using the multiple time frame analysis. And we start looking for that area of market structure. Again, we look at the structure, we can see we pushed down, we broke this swing low. We then took out this high where the market is now pushing up to. Remember that. If we now continue up, we get rid of this line. We're waiting for that pullback. And you can see that the market here is pushed up, made this internal pullback. But we're looking for a major swing pullback here at the moment. So this sideways price action, and we've broken out. So now we can identify that from here, the market broke this high. We pushed up to this high. We've pulled back to this low, and we currently continue up. So that's our swing structure on the pullback. Now, within this swing structure, we also have the internal structure. So you have the smaller swings we can see forming here at the moment. And that's key to understanding when you're applying a market structure trading strategy. So let's just go forward with this again. And I want to slow this down a bit because we don't want to miss what we're looking at. So as we continue up, what we can start to witness now is the market has had this swing push up, okay, one swing. And we've also had this bullish movement like this in the market continue up, and we just had a drop out. So if I just go closer into that price, remember we're inside that higher time frame zone on the monthly right now. We're expecting a sell to target that monthly low. Now what we can do now is we can look at this low here and sorry, wrong low, this low here. This is our last swing low, and this is our last buy to sell move. This creates for me an area here of supply. And this is where I'll be looking to sell the market based on this. And we're already be in that trade on this pullback. But you can also look for a swing pullback, because what you really want to be looking for is the market to push away and come back. But what we can now look to do with this is understanding that the market wants to go for the monthly low. Let me just see if we've got that marked. We haven't actually got that marked on this chart. So this is going to be the low. Okay, so that's your low we're looking at. On that monthly time frame, there is your end target. Now you can see how this greatly increases your risk to reward. Okay, from 1-to-1 using this zone to 11-to-1. Now on a swing structure, you need to understand that you are still bullish. Okay, so understanding swing structure here, we are still bullish, but understanding this internal structure, we have now reversed into a bearish bias. That's why we can look to sell this market. So let's just play this forward. In fact, let me just go 10 times and let's see what happens. So we pushed away. Now we've pushed back into that market, and that's where you'll be looking ready for that entry. And that push away, that pull back, that would be your best entry. And they would be looking to target this low. Now, obviously, you can look to take partials on the way, but using the multiple time frame analysis, this was your monthly area of supply. We then have the market pushing up into this area of supply, and then we're looking for continuation to downside. Now, until we really break this low, we're not going to continue for this low, but we can capture an early entry, understanding the structure, reversing within this swing. Now you can look to take some profits, okay, as the market continues down here somewhere. You can look to take some profits to take the risk off this trade. That means you're then risk free and you can let it run for this final target. It's a great way to protect your capital when you're in trades. So we just let the market run. Okay, so we are coming back up. We've just swept that high, and basically what's happened, we've just taken that high, gone deeper into that area of supply, and we're looking for the market now to take this low. So we just see what happens. We pause that there. So this is our low, what we're looking for the market to take. We've just taken that low. After we see this, we can start to add positions now, because now we've got an area where we've broken this structure, okay, to downside on a swing structure. We now expect the market to continue, okay, to be bearish. So we see this move up, we've broken out, we look for pullbacks, continue until we get down to take out this weak low. So that's how we apply the multiple time frames, and that's how we increase that risk to reward. So let me just now go forward again. So we're looking for a break, so we get a nice breakout again. So now we understand the market's bearish. What we can start looking for here is those pullbacks. So we have the internal structure. So we have another break of structure here. We have a couple of ways we can look for a trade. We can look for a trade. Okay, there was a trade already here as we broke out internally. Okay, so we have an internal inside this on a lower time frame. There was an entry here. We're now broken out. We also have within here a nice area of potential imbalance, which very often when we see an imbalance candle breaking through a structure level, and there is a video within the channel that goes through that, we can then see a pullback into that imbalance continuation lower. Now what you can actually do here is you can look to place a sell, okay, at the open middle of that zone, place your stop above this swing high or above that high, but I'm going to place it above this swing high because I don't expect price to want to come above there. And we'll be looking to target again, okay, a couple of targets. This will be my final target, and then this would be I'm potentially looking to take risk off if we enter this trade. So let's just see if we do get entered. Doesn't look like we're going to get the pullback. And did we get entered in there or not? Let's have a look. So the market just failed to pip into that zone. So that's unfortunate. And we've dropped away. Oh, in fact, we've come back up by the looks of it. And we just swept that high. So you can see what happened here. This was a typical manipulation. And the market has gone down. We've actually broke structure. We have a market structure. Okay, we've gone down, swing through. Now that's suggesting that this is creating a new area of supply, but we've come back, okay, we're above that supply into the area of imbalance above, which very often you will see this happen, and we've been triggered. So what we actually have here is another potential setup that we can take. So let me just go. So this trade, okay, has been triggered here in that move. So we just mark that off. You can see where we come in. We've been triggered there. And then we're looking for another push lower. So the market has now continued lower. Okay, so we've made this drop down and broke structure here and broke structure here. See, a nice push down. Now that does leave a nice breakout area here of supply. Now that's an area of supply that I would definitely look to trade off. So I could place my entry here. The reason for this is because we've already come in. Let me just show you. We've pushed up, okay? We've broken through this area of imbalance. We've made this pullback and then we've dropped out nicely. We've wicked through, we've pulled back again once more and dropped nicely down. So this area here of supply is a good zone to trade from. Let me just make this zone darker. So let's just change the field, make it darker so you can see where that zone is. So there is that zone. Once again, look, I'll be targeting, and this is how we start to stack those orders. Okay, taking out the weak low. We continue to be bearish here. You can see how the market continues to be bearish. I know this is in hindsight, okay, because we already know the price action, but you can see how this works. Okay, so when we break down, you need to understand how these imbalances will impact where areas of supply are. Now, this basically is an area of liquidity above this high, and we went into the area of imbalance. We didn't come back to test it until there. Now, this is a nice breakout. We've just created this swing high, okay, which creates an area of liquidity where we can see the market go up to push through. So we've just wicked through, and then we've pushed up once again, and now we've entered into this area here of supply. So let me just move this across. Now we've got it in the right place. So there we have 3 trades now currently on. Now let's just see if this is going to continue down from here, and it does. So you can see how quickly we reversed from that level. Let's just get this. Okay, so let me just bring this one back so it's in the right place. So you can see we have a couple of trades. What is this one? Must have been used along. Let me just put another short one on here. That's the one we used. And then bring that down. Okay, so you can now see there is our entry, okay, off this level here. So we've got a over 7 to 1 risk to reward. We're looking for a 5 to 1 risk to reward here and an 11 to 1 risk to reward. Okay, so understanding the market structure technique, we're going from multiple time frames. We started with that monthly time frame, okay, with this area of supply. We knew it was in a bearish trend. We've pulled back into that area. We've watched the internal swing change, okay, with market structure, and then we've looked at the major swing change. So yes, this one is a early entry and it's more risk because it's not actually broken a swing structure. Once we broke through, any trades now we can start looking to take are going to be good trading opportunities. Let's just see if we can run this low. Okay, so the market's just come short of this low. Something I'd like to just show you here as well. When we see these markets run these lows like this, what this is doing is bringing in those traders. So just bring us across. So this is just front running this low, meaning it's going to bring in those traders to want to buy this market, thinking it's going to reverse and go up as we didn't take out this low. And what's going to happen, it's going to push up into an area of supply. And what do you think we have sitting right there? Another entry you could take here, understanding this, okay, off this area of supply, again, targeting that low because we know the market wants to go there. And this would be just around a 2 to 1 risk to reward on that trade as well. So this is where your entry would be. Now, it takes time to understand what's happening here when we see all this and understand why this area of supply works. But basically, we broke this structure. Okay, broke through, came back, swept this high, okay, took out any liquidity there and dropped down a nice drop. This is the nice drop to downside, which makes you understand that this is where the money came in. This is where it pulls back. And what we have is this smaller high, which is engineered to create that area of liquidity to take this high to push into this area of supply. Now, I'll do more videos on liquidity later on, but understanding this, you'll hopefully understand what's happening. And this front run of this level means it's just bringing in those buyers to push up this liquidity into this area of supply. So now we should expect this low to be run. And there you have it. We've run that low. So look, you've gone from being able to understand the monthly time frame here to make 11 to 1 risk to reward, a 7 to 1 risk to reward, a 5 to 1 risk to reward, and a 2 to 1. Now, as price goes lower, these risk to rewards will get lower as well. But you can start with getting these first trades, okay, from the high. And again, like I said, this can be applied to a 15-minute and a 1-minute chart. It depends on your risk appetite, depends on the time you have to trade. But most people who want to trade part-time using this type of strategy, understanding you can use multiple time frames for market structure trading strategy, you can apply this to a monthly with a daily entry and still make these types of gains. And that's how you can trade like this with a market structure. Perhaps you struggle with that top-down analysis with a market structure. Well, that's exactly what we're going to go through right now, how I do my top-down analysis with the use of market structure. So keep watching if this is going to help you going forward in your trading in 2024. So first, we're on a monthly time frame here of the EURUSD. We will drop all the way down to a 1-minute time frame here, show you how easily this can be done. It is a fractal nature when you're using market structure with a top-down analysis. Now, I'm not going to take too much time in this video today. A quick to the point video for you to understand how you can use market structure. So on the way up here, we can see this market pushes up, pulls back, continues up. Now, many people are looking at all these structures here. Yes, these are structures in the market, but they are not your actual break of structure. The break of structure comes at the break of this low, which means we go all the way down to this low here, where we break out of this low. These lows here in the market, these pushes down are all internal structure. They do not break out of this low. Then we have this pullback. And once again, we have this drop down, this pullback. This again is not the break of structure. This is your break of structure here to the downside, and this is our current pullback. So this is how you look at marking out your structures in the market. So we have this higher low in the market, this higher high, a new higher high, and until we break out of this low, which comes right here, we then create a new lower low. Now that lower low is only confirmed once we see the reversal back to the upside. We create this lower high, which is confirmed once we have another break of structure to downside, creating a new lower low. That is all we are doing here when we're looking at market structure. So on a monthly time frame, we can quickly look at this chart, identify that we are in a bearish bias. Now all this structure within here, yes, we can use, but we can use on a lower time frame as well. So we now drop down to a weekly time frame. So weekly time frame, we can zoom out and we can see all this structure within. Okay, so we just look at this current era on a weekly. We don't need to go that far back in time. We know this is a push down here. Okay, we have a pullback, we have a continuation, and we have a pullback. So on a weekly time frame, we can identify from this move down, we have a break of structure, okay, a pullback, and a break of structure, okay, and a pullback. Now within these swings, and yes, I know on a monthly, we were not including this swing, but this on a weekly, we would include. Now, if we look at these moves down, okay, we're in that bearish bias. So we look at these last moves down here, we go closer in, we can also identify we have this structure within. So let me just mark this out. We have this push down, a break of structure, a push back up, pull back, another break of structure. Now we do pull back, but we don't break structure to the upside. So this becomes our last line of defense as such. We break out of this low and then we pull back, and then we see these structures within this trend to the downside. And this goes all the way down. Okay, we don't break this low, so we go all the way down here, and then we have a break of this high to the upside. And eventually, well, we don't break there, so we go all the way up to here, and then we break this low. Now we don't actually break this low either, we've only swept that low. So if we look closely here, we just take that off again, and we mark out this swing low here. Okay, well we did actually, we just broke through that candlestick. Let's go closer in. Okay, this is a valid break of structure because the candle closed through. Now to start with, it was a sweep of this low. So this is a valid break of structure and a valid pullback. So when we see the market pulling back from here, okay, we're going to have trends within these areas. We have structure within this pullback. We can start looking for potential shorts back down to take out this low. Now, currently, we can also identify how the market is creating a trend within here somewhere. And currently that trend is holding. So we've only swept that low here on the weekly, and we could see a push back up to remove this high. So it's understanding these structures is key. Okay, so on your top-down analysis, we are bearish on the monthly. If we look at the monthly time frame using what we saw on the the weekly time frame, we saw on the monthly time frame, you can see where we have this push up. Okay, the break of this structure here to downside was here. Let's do that again. We'll actually draw a line now just to show you this. There's our break of structure. We then have a new pullback, and this becomes our new break of structure. So there is our monthly, okay, continuation of the trend. Now, when we go closer in, we can start looking at the weekly trend here. It was bearish, we went bullish, and then we turned bearish when we had this breakup. So currently we would say we are bearish on a weekly. We could then mark off this as our potential strong high. This would be our week low. Now, of course, if you want to learn more on how we do all these markups in the upcoming NFXT Pro community coming up very soon, you can actually follow along with the daily markups. So if we now go down to the next time frame, which is daily, we now know we're bearish on those time frames. We look at the larger swings again, we can see those on the daily chart. It's always important to actually zoom out to see what's going on. If we go closer into price, we can start to see a different picture. So these were the swings we saw on the weekly time frame. Now these, and this would be the actual push down on the weekly where we broke structure, okay, to this area here. So we marked that out quickly. This is the low that we've seen the weekly breaking out. This would be our weekly, okay, strong high and our week low. Okay, so we expect the market to want to run that low. Now, if we look at structure now on a daily, we can identify our swings were bearish here on this move down, as expected. Then we broke to the upside, breaking structure. We broke out again. We broke structure again. Okay, we broke up. Then we had some smaller structure in here. To be honest, I'm not going to look at that as a swing. This is more of a swing pullback. Then we break out this high, and we've just broken out that low with that bearish candle. So you can see we broke this low here. So again, we have a bearish bias now on a daily, but we're having what we call a swing pullback. So what I mean is we have this full swing to downside is now potentially making a pullback because we broke structure. Now, if we look closely here, we can also identify within that area, we have this structure here where we see the market breaking to the downside. So you have structure within that swing to downside. This is where many traders do not understand reading market structure. You're going to always have that internal structure. There's some awesome videos already done on the channel, goes through reading these structures, the different structures with swing structure, internal structure. Now, when we look at this move down, we now go to the 4 hour in a moment. We'll say on a daily, we broke this structure here. So that now means we have a potential strong high and a weak low is sitting here. So that now tells me is that the weekly is bearish, the monthly is bearish, the daily is potentially bearish. So we get out to a 4 hour. We do the same thing. Okay, we can zoom out. We can see where that daily move was. So we can see the swings here within that move. So if we look at this, we can see we have a push down, pull back, we have a push down. Now we do have a smaller breakout, break higher here. Okay, but it's just a push down here eventually, and we break out lower, pull back, we break out lower, and now we've broken to the upside and we're starting to put in a bullish reversal. So let's go closer into that price. So currently on the 4 hour time frame, we've just broken this structure. And again, look, we broke this low here to downside, pull back. We've then broken structure to downside, and now we've broken the upside. That is a reversal in the market. Now, it's not a reversal to actually buy, it's a counter trend reversal. The reason for that is because on a daily, we saw a break of structure, and this could be what we class as that swing pullback. And this is our internal structure on this move down showing us that reversal. But on a 4 hour, okay, those are 4 hour swings. And then we're going to have the internal swings within here. We can see these moves up, okay, pull back, breakout, pull back, breakout, pull back, and we're looking for continuation. Now, we'll be looking for the market to want to run this high next, because that's our area of potential supply where we broke structure here to the downside. Now, I'm not going to talk about supply and everything. We're just going through the multiple time frame analysis with the market structure technique. So right now we have a bullish bias, okay, on the 4 hour. We've broken to the upside and potentially we could have a swing pullback and a continuation here at some point. Internally, we're still bullish. So the internal structure, if it remains bullish here and continues to be bullish, we will see the market continue to push higher. Until we see that market reversing, we will remain bullish. So we're currently bullish on the 4 hour time frame breaking up. Now we can drop down to the 1 hour, but to be honest, on the 1 hour time frame, you're going to see a very similar situation, because on the 1 hour, you're going to have the break of structure here to downside, the pullback, the break structure, the break to the upside, pullback, continuation. So we're not going to see anything really different on the 1 hour, and including the 30-minute as well. So I tend to drop straight down to a 15-minute time frame. This is my time frame of choice I like to move to now. And we can still identify those swings. Okay, we have this high to this low, the pullback, the continuation, the breakout. Okay, so we can still see that reversal we're seeing on those internal swings there on a 4 hour. We can do this on a 15 quite quickly as well. Now, again, when we're doing our top-down analysis, it's important for us to look at our swings in the market. So we look closely at price here. And if we look at the market, we can see we've got this internal structure breaking out, okay? Pulls back, continues up, pulls back here. So we have to break out this high, which we may have just broken it there. We pull back, we've broken out. Okay, we do have some smaller swings, but we do go all the way up here. Okay, you can see we have a continuation. So the market we're expecting to continue up. So even though we have those swings there, if we go closer in again to price, we can also identify our internal swings. So we have this structure within. We can see here moving to the upside. So you can identify how the market creates those structures within. Oh, just grabbed the wrong tool. Let's just back that off. So looking at this chart at the moment, we are bullish. Okay, so the 15-minute is bullish based on our low. We've broken this structure, higher low, higher high, higher low, higher high, looking for new higher low if we continue to break out this high. Now, as well as this, we have the internal swings within here and this section within here. But for the swings, we can see that as being a bullish bias. So currently bullish on a 4 hour, bullish on a 15. Now, if we go down into this section of price, let's mark this out. And I'm going to have this so we can see it on a 1 minute, that is. So mark it out. We'll go down to a 1 minute time frame. We don't need to go down to the 5 minute, mainly because it's going to be similar to that 15 again. So let's look at price here. What do we see? So we go closer into our price. And again, we can do the same thing here. We can zoom out and we can see the movements where we have price breaking structure, pulls back, breaks out, okay, pulls back, breaks out, pulls back. So now we do actually break out. We do break out lower here, then straight away we go back bullish. Now the market does pull back all the way to here. We only sweep this low and we break up higher. So what you could actually use here is a full swing from here to here. When you're looking at this type of market, let's move this across. So your actual move could be from this high to there, and then we'd have to break this low, which we may have done here. We have to check, but then we go all the way down to here. Okay, and then we have, oops, let's do that again, and we have to pull back, okay, to this high. So looking at these swings, what I mean is we've got this low here, we've just swept it. Okay, we didn't close it. So because it's a sweep, we remain bullish. This breaks out this high. Okay, now we do pull back. Again here, we only sweep the high, we don't break out. So it's not a valid breakout. This is our valid breakout point. Let's remove that off. Okay, so when we move back here, this is a valid breakout point to the upside, which creates this low. But I'll pull back, okay, from here. Does not create a high because we don't break out. Okay, we do break out here to the upside. We pull back, make this sweep, and then continue higher. This is where it's very confusing with market structure. But this is all internal structure within here. Our main swing structure is going to be from this low all the way up. So at one point we saw this breakout, we saw this pullback, okay, and we swept, we didn't break out. So this remains bullish, and you could take a trade from here to go back up to take out this high. It's very, very confusing. If I go through it once more for you, this is our main swing low. We did break structure here, and this became our high, was broken up here to the upside. Valid breakout creates a new swing low. Now we have a pullback continuation. So you could draw this out, okay, as a pullback, a continuation. But either way, we'd have to see this low broken and closed through for a reversal. So whether you draw your swing from this low or from this low, it makes no difference, because at the end of the day, Okay, the market, and again, you could just use this as your swing high. The market has to break out of this low. Okay, so understanding this technique is going to be key. Now from here, okay, the market never goes lower. It's just gone up and we've just broken out to this high. So you can see then how the market is making these swings and then we've broken structure. But within this breakout here, okay, and this low, we have all this structure within. Now, the best thing to do here is you're either looking for a pullback to go short, okay, or you're waiting for the breakout again for a pullback to go long. Now, going back what we went through on the 15 and the 4-hour, we knew we were already bullish. So if we know we're bullish on those time frames, wouldn't it make sense to only look for buys again? So if we've broken structure here to the downside, we just want to wait for the structure to be broken back to the upside. That has now happened, which means we wait for the pullback continuation. Now, the best thing for that is to watch the 15-minute with the 4-hour and then look for those 1 minute to shift in the same direction. That's what we've just done. So that's how I look at my top-down analysis from that monthly time frame all the way down to the 1 minute. Now, I'm not saying I actually trade the 1 minute because I don't really trade the 1 minute. 5 minute, 15-minute is my entry time frame. Now, in fact, I will share in a moment a current trade that I'm in on this pair, so you can see how I've done that top-down analysis. Let me just zoom in closer here. Okay, so we have this area here on the 15 where we broke structure here to the upside. We never broke out again. Okay, so this becomes our high, this becomes our pullback, and that's our continuation. Now, when we go for our internal structure here, what I looked at was the fact that we made this sweep. Now, what did I say a minute ago on the 1 minute? If we have the market making a sweep, we can look at that as a continuation because we never closed structure here. So our internal structure is still bullish. We then break out of this structure here to the upside, leaving an area of demand. We have caught my entry and the market's gone to the upside. That was one trade that I've actually taken. My second trade I took here was after we had this sweep through this low here in the market, reversal, and I've taken an entry. Now, I did also take a losing trade here. We just move this across. I tried to take another trade off this candlestick and I actually got swept out on that move right there. Now you can see the actual trade idea that I was looking for at that point was a great idea. I was looking for the continuation here to take out this high. So the actual trade idea was a very good idea. Since then, the market has held and we now continue back up. So understanding, reading the candlesticks, reading your sweeps, everything else is what matters. Let's have a look at this actual trade I was just talking about that I took down here and the trades I took here. So you can see the trades I've actually taken as well. So I'm on my MT4 platform at the moment. And I'm just wanting to go through really and show you those trades I've taken. You can see this is the first trade that I took. This is that area here. I took the entries off, okay? This is my first profit target. I took a profit target here. Take off profit at this area. This has put me into a totally risk-free trade. Now you can see that the market has continued up. I've got my final target sitting up here above price and I've locked in some profit, which I'm going to be moving this stop higher up soon as well. This is current price level, you can see. So I have this second trade here, you can see as well, where I've taken my first profit target at this high. That's put me into a risk-free trade as well. Okay, and then I've taken my second profit at this swing high as well. This is where I'm looking for price to run those highs. Now, I've also tried to take an entry off this candlestick. You can see that's why I was saying I got swept out. There was my losing trade. Okay, that's why I took a losing trade. I had a profit target set at this high, okay, and I had a further high for the next profit target, which would have been hit on this move up. So unfortunately, this trade didn't work out, but I've also already risk-free in this trade, profit already taken, also have some locked in, which I'll bring it up higher soon as well, as we see a continuation with price. And also took some profits on this trade here. So to take a losing trade here with these profits already taken is very good risk management because I knew that I was already in profit to take this trade, even if it was a losing trade, which it was. Now, I personally would have taken another trade if I'd have seen this sweep. I wasn't at my platform at the time, but that's how you start reading markets with the candlesticks, the structure, and supply and demand zones. So these are areas of demand that are taking price off using the years of experience that I've got. So this is how I look at doing my top-down analysis. I've shown you as well a trade here, but if you want to actually join a community where you get access to these chart markups I put within that community, you can join. There's going to be a link popping up right now.